Thanks for joining us for another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum, where all voices matter. Is now the time for central banks to introduce their own digital currencies? And what will be the impact on the markets and consumers? We've invited Dr. Pierre Siklos to join us and to discuss this trend. He's a professor of economics at Wilfrid Laurier University and also a senior fellow at the Center for International Governance Innovation. Welcome to the program.
Nice to be here. Thank you.
First of all, I guess to get our audience a little bit up to speed, what is digital currency?
Well, to put it simply, I guess there are two kinds. One is they both have the same feature, which is they facilitate transactions, financial transactions electronically. But then there are two basic kinds. One is at the wholesale level, so for large amounts, let's say $10,000 or $100,000 transactions. And then there's the one that's most under discussion these days, which is the retail kind, which is a replacement for ordinary cash, where essentially you can imagine that you would use your phone or some other device to buy and or sell, if you like, goods and services, the way you'd use cash and coins today.
Yeah, so obviously there are some traits of digital currency that are the same. I mean, in a sense, currency is a replacement because, in a sense, it represents goods or services, right? And it has no intrinsic value, but it has value because people have trust in the producer of that currency. So that, I'm presuming, is the same with digital currency. But how would you describe the main difference then?
Well, you put your finger on it, because we tend to think of cash as legal tender, so that when you hand over cash, the transaction is settled. But when you use a debit card or a credit card or other electronic forms of payment, legally speaking, you haven't settled the transaction until you've paid off the bill, if you like, at the end of the month. So the idea here is to replace cash that you have in your pockets, the bills that you use, with an electronic version. And hopefully that electronic version has to have the legal tender provision or quality to it. And lots of central banks understand this, but technically it's not clear that legally speaking, if they were to introduce a retail central bank digital type of currency, whether tomorrow it would constitute legal tender. So some regulatory and legislative changes would have to be undertaken to make sure that actually they are equivalent to the cash that we hold in our wallets.
Okay, I don't want to jump down too many rabbit holes at the same time here, but that seems to be a big issue then, that there's got to be some legal changes to ensure that that people can have the assurance that digital currency is going to qualify for any transaction. Is that right?
That's right. I mean, in principle, it's just a legislative change, and certainly central banks are aware of this. It's not something that you discuss very much, because you really don't think of the bills that you use, the cash that you use, as sort of settling a transaction. You think when you've bought something with a debit card or credit card, you've paid it off. But legally speaking, you haven't settled the debt. So it might seem like a legal nicety, but it's an important one. And when these retail central bank digital currencies are introduced, the legislatures will have to make sure around the world that it is like legal tender. And certainly in Canada, they're aware of this.
So what are the trends in adopting central bank digital currencies right now?
Well, so far, a few small countries have adopted them. Perhaps the best known are the ones in some of the Caribbean countries. For example, the Sand Dollar in Bahamas. And those were motivated by the fact that, in part, they want to get ahead of the game, but really they want to increase what economists like to call financial inclusion, which is to bring in more individuals into the financial system. These individuals may not have cards, credit or debit cards, may not be able to borrow, but need to access the ability to buy goods and services, and they don't want to do so or are unable to do so with ordinary cash. And so the alternative is to do it digitally. And So at this stage, that's what they're trying to do. But they're restricted. So they're restricted to when you go to the Bahamas, you can only use them there. You can't take your digital from the Bahamas and use it elsewhere, for example.
Welcome back to Boom and Bust. I'm your host, Tony Clement, here with Dr. Pierre Siklos. He's a professor of economics, Wilfrid Laurier University, talking about all things digital currency. You were just making a comment, Pierre, just about what's happening in the Caribbean. Please continue your thought.
All I want to say is that initially these are small countries, and there's some elsewhere in the world that are to facilitate the ability of the public that doesn't use banks or to increase their ability to access the financial system, and thereby eventually allow them the possibility to borrow from the financial system. So this is what we tend to refer to as financial inclusion. So the idea is to enhance financial inclusion. Other countries have different motives for introducing these digital currencies, which is simply that we're becoming so used to using digital forms of payment that this is a natural evolution in the monetary system.
Right. So can you explain why central banks, you said social inclusion as part of it. Is there a stability argument as well? I'm just trying to get all of the reasons why a central bank would want to consider this.
No, I don't think there's a stability issue here. It's simply that in some countries, a good example is in the U.S. There's still, I can't give you the precise figure, but it's at least, say, 10%, perhaps a little bit more, of the public that don't own bank accounts, don't have any regular access with the financial system, but they may have smartphones already. And so they may be more willing, if they, as you pointed out earlier, if they trust the financial system, to use digital forms of payment and a digital form of cash instead of using checks or other forms of payment through the banking system. But it's debatable how useful this will be, because people who don't want to use the banking system may not be convinced by the digital form of cash to use it. So in sort of more advanced countries, the motivation for introducing this kind of system is somewhat different. It's increase the efficiency of the financial system, reduce the costs of transactions. There's always a bit of a cost when you use cash. You have to go to an ATM or go to a bank to withdraw cash, whereas if you have it on your smartphone, it's readily there. And in principle, the digital form is cheaper than printing notes to use for everyday transactions.
Right. And so where they have introduced it, have they had to do a lot of education of the public in order, and businesses indeed as well, in order to speed up adoption?
Oh yes, absolutely. The plans to introduce these types of devices has been ongoing for at least a couple of years, if not longer. And in fact, when they were introduced very slowly. So they had trial runs, if you like. And even to this day, the idea is to gradually sort of inform the public to let them know how this works and see for themselves that it can work, and then slowly expand it to the wider public. And so, yes, it's a very long process to reach this type of conclusion. China perhaps is one of the countries that's further ahead, but they too have done the same type of process, which is they trial runs where certain segment of the population is using this type of digital currency to settle transactions. So it's a very gradual process.
Gotcha. What are the financial benefits, and also what are the downsides, if any?
Well, the financial benefits is if it reduces the transactions costs of buying and selling goods and services, that benefits the economy. Now, we only have guesstimates about how important that is, but it's likely to be, doesn't sound like a big number, but it could be 2 or 3% of GDP, for example, but it could be smaller. So the other benefit is potentially, and this is much more controversial, is that in practice, if you have a digital currency, the central bank could conceivably pay interest on that digital currency. And in a world of low inflation, we didn't care about that so much. But now that inflation is very high, the thought of holding cash in your digital wallet and receive an interest payment for that is somewhat attractive because it preserves the real value of that cash. Now, I have to be clear, central banks have made very clear that the initial wave of retail type CBDCs are going to be just like cash. There's not going to be any interest because, as you can imagine, banks might not be too happy to have this kind of vision from the central bank.
I'm going to have to cut you off again. We're going to go to commercial. And we're back here at Boom and Bust. I'm here with Dr. Pierre Siklos, a professor of economics at Wilfrid Laurier University. Please continue with your thought, Pierre.
I was just saying that the potential is for a retail type of central bank digital currency to have an interest payment associated with it. And as I was saying, in a world of higher inflation, especially if it lasts for a few more years, that might prove attractive to those of us who want to use cash. But as I said, central banks have made it very clear that for the time being, it's just a replacement for cash. It won't have any interest attached to it, in part because the worry is that it'll negatively affect the banking system, which, after all, makes a profit from the difference from the interest it earns from loans, and roughly, and the interest it pays to depositors. So that's the controversial aspect. But that's the big potential for retail central bank digital currencies in the future.
And in terms of other downsides, you've mentioned issues in your article that I read about privacy and overburdening the banking system. Maybe talk about those issues and any other issues.
Well, privacy is one that's it's not specifically associated with central bank digital currencies. Any form of digital transaction raises the privacy issue. And that's one that policymakers, not just central bankers, have to grapple with. Ultimately, it has to be the job of the government to set the rules and the central bank to follow those rules. So the central bank is more concerned with how to record these transactions, ensuring that there's as much anonymity in buying and selling using digital currency as there is with ordinary cash. And those are technically feasible things to do, but they're not straightforward, and they're very technical issues. As a result, once you bring in things like security and those types of issues, the role of the central bank is potentially impacted. So again, this will involve some legislation to make it clear where the responsibility of the central bank ends and where the responsibility of other agencies and the government begins, to ensure that the issue of privacy and those types of issues are separate from the mere sort of introduction of a digital currency and making sure it runs effectively. And then, of course, there's always the danger that at least economists talk about, which is that since you can create digital currencies very easily, if there's a need in future to put money directly into the economy, a digital currency is an easy way to do this. Now, the good news is that, or the bad news, depending on, of course, your position, is that the pandemic taught us that fiscal policy can act very quickly and deposit money into individuals' bank accounts very quickly. So this old problem that it takes fiscal policy a long time to get money into the hands of the public, that seems to have sort of dissipated. So this worry that central banks will be simply asked to just create digital current money and put it in everyone's bank account, that seems to have faded somewhat.
Gotcha. You've also talked about an inconvenience yield, and so maybe you can describe that and how that could be avoided.
Well, the inconvenience yield is a way of summarizing all those points that I raised earlier, which is that there is a potential loss of for example, privacy. And
right.
That's an important issue. So all those types of issues, whether it's the security, what happens if there's a big meltdown, a digital meltdown, and the records are lost, just to give you an extreme example, how can you demonstrate that you had those digital dollars, if you like, those types of technical issues. So these are all risks, and with any risk, there's a cost associated with them, and that contributes to the negative side of the picture.
Gotcha. So would you say that there still is a way to go in terms of getting the proper regulation and supervision in place now? We're not quite there yet, or are we there now?
So, no, we're not there yet. In principle, some of the basic issues can be resolved, although anytime we raise the issue of privacy, for example, we know there are different sides to that debate. But there's, in the case of retail centered by digital currencies, there's another issue, which is the international dimension.
Right.
One of the things that, in principle, you should be able to do is to be able to hold digital money in other currencies, whether it's the euro or the US dollar. And in principle, it should be a lot cheaper to do it this way than to go to a bank and buy, the US dollars or the euro that you want for your holidays, and vice versa. And of course, another big business is the business of remittances.
Last time, we're going to take a brief break. Welcome back to Boom and Bust. I'm here with Dr. Pierre Siklos. He is professor of economics, Wilfrid Laurier University, talking all things central bank digital currency. We were just talking about the global aspects of it, Pierre, so please continue with your thought there.
Yeah, so one of the sort of promises of the retail form of central bank digital currencies, because at the wholesale level it's already in place, is the ability of individuals to carry digitally various currencies, either for personal reasons or because they want to send money to family and relatives abroad, and vice versa, funds being received into Canada or any other country. But that brings up a different set of regulations, because if it becomes very inexpensive and very easy, literally the click of a mouse, that you can hold these digital currencies, there's always the risk that countries that feel themselves sort of weaker economically will become worried that their currency will be replaced by a digital Canadian dollar or a digital US dollar. So international cooperation is going to be essential, and nowadays that's in short supply. So although central banks talk about this as being sort of an important contribution that digital currencies can make, I think we're a very long way from that. But in principle, it's possible.
And has there been a lot of global debate about this, or is this fairly under the radar right now?
Well, I guess it depends who you talk to. There is a global debate, if only because, in spite of the fact that there are lots of these smaller companies that have introduced cheaper ways to use the internet to transfer monies between countries, the actual cost of sending and receiving money across the world, although it's declined, it hasn't declined as much as we might have expected. And so the promise is, the central banks tell us that if you allow for the introduction of these RCBDCs, as they're called sometimes, that the costs will fall even further, that there'll be more pressure, competitive pressure, to reduce these costs of sending to and from remittances. And that's going to be a boost to the global economy. But we're away from there, a long way from there.
Is there any concern that central banks are engaging in kind of mission creep with these new products?
There's a worry that that might end up happening, but I think after the financial crisis of 2008, 2009, I think central bankers are aware that they have a lot on their plate. They're responsible for monetary policy and inflation in particular, and financial stability, and keeping the balance between the two is proven to be harder than expected, particularly as inflation has risen. And so depending on how these digital currencies are introduced and the responsibilities that governments award central banks for the management and the operation of these CBDCs, there is a risk of more mission creep, definitely, because of the points we raised earlier about privacy, for example.
Right, and the fact that really there's been a lot of conversation, at least in Canada, about maybe the central bank, the Bank of Canada, sticking to its knitting a little bit more rather than looking for new mandates. Are you getting that sense too?
Oh, sure, yes. I guess to be clear, I'm in one of the camps that says it should stick to its knitting and avoid mission creep as much as possible.
Gotcha.
But you can see why politicians might like it, because it shifts responsibility to the central bank. But eventually, if things turn out badly, it's the central bank as an institution which prizes respect and trust that ends up being the loser.
Right, because it gives another point of potential criticism and further debate, right?
Yeah, after all, central bankers may be respected and competent, but they are unelected. And we like to think, at least in countries like Canada, that it's the elected representatives that are ultimately accountable. So there's a balance there. You certainly want the central bank to be responsible for technical matters and to explain itself to the public, but to be responsible for all things financial, I think, is asking a lot of the central bank.
Well, it looks like we'll have to keep monitoring the story as it moves forward. I want to thank you, Dr. Pierre Siklos, for being on our program today, however.
Thanks for having me.
Thank you. Again, I want to thank Dr. Pierre Siklos for coming on the program, talking about this move to digital currencies, obviously taking place around the world, but at different speeds. And there's a lot of issues to consider before we go headlong into this, according to Dr. Siklos. So thanks for watching today. I hope that was helpful to you too.